Hello and welcome to Business 360. I'm Arundhati Ramanan and here are the headlines that we're tracking for you this evening. Sensex and Nifty declined to end at their lowest level in a month. A sell-off in global bond markets worldwide rattles stocks. Borrowing costs in US and Europe rise to the highest level in over a decade.
If the price goes above $100, this thing, it's not going to be in the interest of either the producing country or anyone's interest. You will have large organized chaos.
Petroleum Minister Hardeep Puri warns of organized chaos if oil prices breach the $100 mark, but says India is well positioned to weather the impact. Saudi and Russia agree to extend production cuts till December.
We need the good guys to come to talk to us, to tell us what are the malpractices in the market, and to help us to craft solutions so that we address that, so that the good guys win.
SEBI Chief Madhvi Puri Butch urges the good guys in the investment advisory industry to come forward and report malpractices, says 35% of the advisors are still not registered, and SEBI wants the industry to grow and hit 1 million investment advisors. Crucial GST Council meet over the weekend. Sources say that the Fitment Committee has turned down industry's proposal seeking a 5% tax on EV batteries instead of 18. Requests for uniform additional compensation in cess on tobacco products turned down as well. SBI Chairman Dinesh Khara says that the new urban housing subsidy scheme can generate demand for 50 to 60 lakh additional home loans. Says hiking the loan cap to 50 lakh rupees will benefit more borrowers. Government claims saving 10,000 crore rupees under the Farmers' Income Support Scheme after removing ineligible beneficiaries from the database. Sources say that the government may consider including landless farmers under the scheme or hiking the installment amount. However, no proposal has been floated yet. Lenders to Jet Airways question the source of the Jalan Kalra Consortium's funds to revive the airline before the company law appellate tribunal. Say the source of money is doubtful and could even be laundered. The Enforcement Directorate is not expected to be vindictive, says the Supreme Court. Pulls up the Financial Crimes Investigating Agency, asking it to be fair and act with utmost probity. Apex Court rules the grounds for arrest must be provided to the accused in writing. 3 people are dead and 23 army personnel are reported missing after a cloudburst in North Sikkim. Rescue operations are currently underway. For the first time in modern U.S. history, the House Speaker Kevin McCarthy gets voted out of the job. Hard-right members of McCarthy's own party oust him just days after he led a successful bipartisan effort to avoid a U.S. government shutdown. Jyoti Surekha and Praveen Oya strike gold in compound archery at the Asian Games. This is India's 16th gold medal and 74th medal overall. This is India's best performance at the Asian Games so far. Those were the headlines that we're tracking for you this evening. But first up, let's start with the sell-off across stock markets worldwide. Bond markets in US and Europe saw a sharp fall, and this rattled equities globally. Sensex lost nearly 300 points, and Nifty was down 80 points. Mid-caps got battered, with the index losing over 500 points. Prashant Nair is here with the wrap of all of the market action. Prashant, red on the screen there.
Well, it was supposed to be a poor session because it was ugly overnight when we came in the morning. And it was ugly for a while. For the bulk of the session, actually, there was some recovery towards close. The Nifty, as you can see, recovered 100-plus points from the day's low, ending just under 0.5% lower. For the banks, the recovery was not as sharp, ending almost 1% down. For the broader market, mid and small cap, between 1.25% and 1.5% in terms of cuts. Financials were under pressure, as I said, on the Bank Nifty. So Axis Bank, SBI, IndusInd in large caps, which sold off. There was NTPC, which was down. Ultratech and Maruti were the other large cap losers, up to 2%. Now, some gainers from the FMCG space. There was Nestle and Lever. HDFC Bank was the other one, which ended at 1% higher. People have been waiting for this one to turn, and today there were first signs in a down session. Broader markets, again, lots of financials which sold off. PNB, Indiabulls Housing, M&M Finance, L&T Finance. Other than that, there were real estate developers like Sobha, Loda, which was lower. Zomato was down. JSW Energy, Metro Brands, which has done well over the last couple of days, sold off. There was BDL and EMS, a recent listing, which gave back some of the recent gains. Some gains coming through. Advanced decline, of course, was skewed in favor of decline, but Suzlon was up. JSW Infra, there's a rating upgrade as well. Stocks done very well, 40% since IPO listing. DMart, MapMy India, and Ramco were some of the other names which stood out. It was a broadly down day, although there was recovery which came through. We need stability. US yields need to stop rising, and the US dollar also needs to go down. I think those are the two things which markets will be very keenly watching over the next couple of days, and also as we come back tomorrow morning. Back to you.
Right, Prashant, thank you so much for those details. And as Prashant was pointing out, the borrowing cost in US and Europe has surged to its highest level in over a decade. Lata Venkatesh is here to decode the movement in the US bond yields and what it could mean for stocks back home. Lata?
Yes, US 10-year yields, which is the benchmark for the cost of capital for the world, is at 16-year highs of 4.84 at the end of trade on Tuesday. Now, the immediate reason, the trigger was the JOLTS data, the job openings data. Vacancies in August were expected to come at 8.8. They actually came in at 9.6 million. That strong is, that hot is the labour market. And that was the reason. But, that's only the immediate trigger. Yields are actually up 100 basis points over the quarter if you compare from July 1st to October 1st week. Now, the reasons for these are a combination of monetary and fiscal reasons. Monetary reasons, we know that the Fed became more hawkish when they met in September. They pointed out that there could be one more hike this year itself, which was not on the cards as well. The number of cuts in the dot plot were brought down by 50 basis points. So, which means the rates are going to remain higher for longer. But the bigger worry is fiscal, actually. The Americans discover with each passing month that the government is borrowing more and more. It's actually led to that even shut down for debt reasons, if you remember. The fiscal deficit this year, or rather the shortfall in revenues, is expected to be $2 trillion against $1 trillion last year. Now, that gap has to be filled by selling more treasuries, selling more US bonds, and buyers are declining. The first buyer who is off the table is the Fed itself. The Fed in previous times, due to quantitative easing, was buying bonds. Now it is actually reducing its balance sheet, allowing bonds to run off from the balance sheet. Its balance sheet now is reduced by $1 trillion over the year. Every month it is reducing its amount of treasuries it holds by 65 billion. The next buyer who has disappeared are the Japanese. Japanese yields themselves have risen by about almost 1 percentage point over the past year. They are at 10-year highs. So the Japanese funds, which were big buyers of US treasuries, are not there. A lot of countries have stopped buying or at least are reducing their exposure to US treasury and to the dollar, especially after the Russian reserves were de-recognized. So for a whole host of reasons, the buyers have declined and supply is only expected to increase because of the spending by the Biden administration. Now, what can turn? Just as the jobs trigger was there, jobs data trigger, another jobs data trigger can also bring it down. Ahead of the October 6th non-farm payroll data, some people are expecting profit taking and short covering on in the bond market. The chances are that when there is such a big rally of rise of 100 basis points in yields, the come-off can also be equally swift. So people are looking for the turning point. But in the medium term, all good news will be bad news. All good data will be seen as reasons to sell off bonds.
All right, Lata. Many thanks for those details. Now, on to the energy markets, where crude oil prices fell on demand concerns stemming from macroeconomic headwinds. These concerns outweighed Saudi Arabia's announcement to continue crude output cuts to the end of the year. Investor sentiment was also weighed down by a strong US dollar. Petroleum Minister Hardeep Singh Puri has warned that there will be an organized chaos if oil prices breach the $100 a barrel mark. He made those comments while speaking at an event in Abu Dhabi. He, however, added that India was well positioned to weather the storm. Puri also took to social media platform X and urged major oil-producing nations to be more sensitive towards the consuming countries.
I hope it doesn't go beyond 100, because then you should not be worrying about the impact on India. India will manage. India is a large economy. It has a lot of domestic production. We'll cut back. We'll do something or the other. But I would worry about what happens to other parts of the developing world, the global south. It will reach the inflection point where the inflation, which is already around thanks to the stimulus packages, will result in this flat growth large parts of the world, becoming recessionary, and then it'll dip. You'll see the same problem that happened in 2008. If the price goes above $100, this thing, it's not going to be in the interest of either the producing country or anyone's interest. You will have large organized chaos.
Gold prices were under pressure today as US dollar continued to gain strength against global currencies. The ongoing correction has brought gold close to a 7-month low. The gold futures contract for December 2023 expiry on MCX also hit intraday lows. SEBI chairperson Madhvi Puri Butch has revealed that 1 in 3 Indian investment advisors are giving guidance to small investors without registering themselves with the market regulator. Speaking at a conference organized by the Association of Registered Investment Advisors, the SEBI chairperson urged the good guys in the industry to come forward and report malpractices. She added that the SEBI wants the industry to have 1 million investment advisors, but cautioned that there is a need to distinguish between fact versus fake claims.
We need the good guys to come to talk to us, to tell us what are the malpractices in the market, and to help us to craft solutions so that we address that, so that the good guys win. We want 1 million investment advisors. Let me tell you, it's as much, I would say not as much. I think it is clearly our failure that we have such a small set of investment advisors. Okay? And every new whole-time member who comes into SEBI, some of my colleagues here will vouch for it, every new member who comes in takes a look at it and says, why is this number so small? Why isn't it larger? And 2 weeks later, after they go through all the details, they're like, we can't have 1 lakh of these kind of guys. Right? So that's the problem. Okay? We can't have 10 lakhs of these kind of guys, but we definitely need 10 lakh of those kind of guys. We need the good guys to win, and for that, the association has to come forward and tell us what's happening, because by the time we otherwise get to know, a couple of people have already committed suicide in Indore. That's the reality.
Meanwhile, the government's new urban housing subsidy scheme can generate demand for 50 to 60 lakh home loans in the next few years. That's the word coming in from SBI Chairman Dinesh Khara. In an exclusive conversation with CNBC-TV18, Khara added that the scheme could have a positive influence on the housing and home loan market as well.
Broad number, it is actually back of the envelope calculation. Another maybe about 50 lakhs plus home loans could be granted, 50 lakh plus. So it was already about 1 crore plus, which was there in the PMAY urban. So I think this will add to at least another 50 to 60 lakh more home loans. We have our market share would be somewhere around 30% or so.
The GST Council is scheduled to meet over the weekend. Sources tell us that the EV industry could be in for a disappointment as their demand for a reduction in GST on batteries has been turned down. Timsi Jaipuria joins us now with the details. Timsi, what are you picking up?
Well, when it comes to the GST Council, which is scheduled to take place on 7th of October in New Delhi, this time there are some serious disappointments for the industry. To begin with, electric vehicle batteries, that is something where the industry had sought clarity and a revision in GST rates. They wanted that the batteries should be taxed at 5%, and that proposal has been turned down by the Fitment Committee. They say that these lithium-ion batteries are used by other industries also, thus it does not warrant any change. Apart from that, other disappointments also include some disappointment for the tobacco sector. They had sought a revision on the compensation cess. They said that since BDs don't attract a compensation cess, similarly, the cigarettes, which are 70 mm size of a stick, even there should be a consideration that there should be no compensation cess there. Well, over there also, the Fitment Committee has turned down the request. They said for BDs is a small-scale sector industry. That is why the cess was not levied at the time of the launch of GST. And they still continue to believe that cigarettes is a sin good and they should attract compensation cess. So the proposal has been turned down over there as well. Apart from that, when it comes to cryptos, over there could be some relief because government is taking more time to formulate a view as to how the entire crypto ecosystem should be taxed under GST, what services, what transactions. They want each and every scenario to be covered. For this last year, if you remember, in June 2022, there was a GST Council meeting over there. A states panel was drafted. They were given this task to come up with a formal sort of a roadmap for crypto ecosystem. That panel has expressed that they are unable to give the entire paper that was asked by them. And now what the council is likely to do is give more time, create a separate, sort of a paper that will be housed, that will be entirely worded by the tax research unit in CBIC. They will be given this task and they will be now submitting a paper to the Fitment Committee. Only then crypto ecosystem can be taxed with clear guidelines and case scenarios under GST. Apart from that, on services side, well, yes, for race courses, there could be a clarity that the council is likely to issue amendments on actionable claims. 28% GST is likely on the services by a race club, via a totalizer, or a license to the bookmaker. These are some of the action points that we are likely to see in the upcoming council meeting.
All right, Timsy, many thanks for those details. But from one exclusive to another, the centre has reported savings of 10,000 crore rupees under the PM Kisan scheme in the last year. Sources say that this was made possible by the removal of 1.72 crore beneficiaries who were deemed to be ineligible. Sources also tell CNBC-TV18 that the savings may also allow the government room to consider inclusion of landless farmers under the scheme. Sapna Das is here with more details. Sapna, what are you picking up?
Well, definitely the centre is seeing some good savings under PM Kisan, and that's basically because of cleaning up of the PM Kisan database. So we're given to understand that savings worth around 10,000 odd crores probably have been garnered by the central government in the last 1 odd year. And, a large number of ineligible beneficiaries have actually been removed from the PM Kisan database. Around 1.72 crore is the number as of now. So this brings the PM Kisan database to around 8.75 odd crore. So this is what has actually led to those savings that we are talking about. Now, these savings do throw up space for leverage for the central government if so desired. Basically twofold. One is, of course, if the centre so desires, can go ahead and make a major change in the scheme and include those sharecroppers and marginal farmers and tenant farmers, basically the landless farmers who have been a big chunk of the of the farmer populace, but do not get enough benefits, and they need to be looked at basically. So that is one category. However, to do that will be a major modification in the scheme, and it will be highly conditional upon states also to do their bit for this to actually go ahead. So that's one option. Second, of course, the government can increase either the tranches of installments under PM Kisan, say from 3 to 4, for example, or it can also increase the amount. Now, on both these fronts, there is no proposal yet. Nothing has been drafted, so to speak. It'll have to be done, of course, by the nodal ministries, that is basically agriculture at its part, and then, if required, will go forward. So as of now, there's nothing concrete on the table, but this is what that 10,000 crore worth of savings under PM Kisan, this is the kind of headroom that it throws up.
Right, Sapna. Thank you so much for those details. Now, in the aviation space, there's a new twist in the Jet Airways Revival saga. Just a few days after the Jalan Calrock consortium said they've completed payments to take over the airline's ownership, lenders have told the company law appellate tribunal they are doubtful about the source of money deposited by the consortium. The additional Solicitor General arguing for the lenders said that the money could even be laundered. Lawyers to Jet Airways denied the allegations. Madiha Mujawar joins us now with the details. Madiha, lenders now raising questions over the source of funds. Where is this case headed then?
Well, this development is not completely surprising. Lenders have been in a long standoff with the Jalan Calrock consortium for several months over non-payment of dues. But what rings the alarm here is what the lenders said in today's hearing at the NCLAT. As you mentioned, the additional Solicitor General N. Venkatraman, who was arguing for the Committee of Creditors, questioned the source of funds deposited by the consortium. He said the money deposited by JKC has come from several accounts and those sources are not known. and not being very explicit, he further said that the money could even be laundered, and therefore the lenders will be filing their objection to JKC's compliance application. Remember, just last week, JKC announced it has fulfilled all financial commitments required to take over the airline. It paid 350 crores, including the 150 crores deposited as performance bank guarantee, which was invoked, and then 100 crores each in August and September. JKC said it will get the airline up and running in 2024, but this is not the first time that JKC set such target. They previously missed 2 deadlines to restart due to the tussle with bankers over payments. So everything is contingent on when banks transfer ownership to the consortium, and if this battle continues and banks are not satisfied with the funding, then the revival of Jet Airways could be even more uncertain.
Right, Madiha, many thanks for those details. So that's the latest in the revival of Jet Airways. On that note, it is time for us to head into a short break. But coming up, the Enforcement Directorate is not expected to be vindictive, says the Supreme Court, pulls up the Financial Crimes Investigating Agency, asking it be fair and act with utmost probity. That and more on the other side. Stay tuned. Welcome back. You're watching Business 360. At least 3 people have died and 23 army personnel are reported missing in North Sikkim. This after a cloudburst over Lonak Lake, triggering flash floods in the region. Search operations are currently underway. Chief Minister Prem Singh Tamang held a meeting with authorities to assess the situation. Some army vehicles that were parked near Bardang were submerged as water levels suddenly rose after its release from the Chungtang Dam. The Supreme Court urged the Enforcement Directorate to furnish ground of arrests in writing while taking an accused into custody. The Apex Court made those comments while granting bail to directors of Gurugram-based real estate company M3M in a money laundering case. That's not all. The court also urged the Enforcement Directorate to not work in a vindictive way. Parikshit Luthra gets us more on that. Parikshit?
The Supreme Court has held that grounds of arrest must be given to the accused in writing without exception. In a stinging judgment, the Apex Court said that only reading grounds of arrest and not furnishing them in writing reeks of arbitrariness. The bench said that the chronology of events speaks volumes and reflects rather poorly, if not negatively, on the Enforcement Directorate's style of functioning. This judgment was a response to a plea by Pankaj Bansal and Basant Bansal of the M3M group. The court quoted a judgment in Vijay Madan Lal Chaudhary and that of V. Senthil Balaji to say that grounds of arrest must be given in writing and safeguards in CRPC and PMLA must be complied with. The safeguards include recording grounds of arrest, followed by serving them on the arrestee in writing. The court noted that not recording reasons and not giving them in writing to the accused would entitle the arrestee to be released. Second important issue, the court also noted the manner in which the Enforcement Directorate registered a second ECIR immediately after the applicant secured bail in the first. The applicants were summoned on one pretext and arrested on another within a span of 24 hours. And this, according to the court, manifests a complete lack of bona fide.
Right, Parikshit. Many thanks for those details. And with that, it is a wrap on this edition of Business 360. Many thanks for watching, but stay tuned to CNBC-TV18. The news continues on the other side.